Hello students, how are you all? I hope you are doing well. In the previous lectures, we have completed our very important chapter in CA Foundation accounting subject is bills of exchange and promissory notes. Now, in this video, we are going to start a new chapter, that is bank reconciliation statement. So very important chapter from examination point of view. Without a question from this chapter, you cannot find majority case 99.99 case percent cases you will not find a question paper. Do remember. So here you may get 5 to 10 marks, 5 to 10 marks weightage. Sometimes, apart from problem, you may also get a true or false statement. In that case, it is a bonus for you. It's a bonus for you. Now, what we are going to learn in this chapter, that we understand. Next, what? Yeah. Okay. First, look at. So, before starting any new chapter, we try to understand what is the background of the chapter. What is the background of the chapter? Next, what is the meaning of BRS, and what is the objective of preparing this BRS? After that, how to prepare, how to prepare this BRS. This consists of format and methodology. Observe carefully. Before learning any chapter, just look at the background first. After that, what is the meaning of this BRS? Suppose in the concept of journal, we understood what is journal. In the concept of ledger, we understood what is the meaning of ledger. In the concept of a trial balance, we understood what is the meaning of trial balance, meaning of subsidiary books, meaning of cash book, meaning of bills of exchange, promissory note. We understood all these things now in the same manner. In the same manner, we try to understand what is BRS and what is the objective. See, what is the objective of preparing journal, or features of journal, or characteristics of journal. At the same time, ledger, trial balance, subsidiary books, cash book, accounting for GST also we have learnt, and bills of exchange, the objective of bills of exchange. In the same manner, what is the objective of this BRS and how it is prepared. In case of trial balance, how the trial balance is prepared, format of trial balance, journal type format, ledger type format. At the same time, methods, there are three methods now: total method, balance method, total and balance method. In the same manner, how this BRS is prepared, what is the format of this BRS, and what is the methods of this BRS, and some miscellaneous concepts. And some miscellaneous concepts we try to understand in this BRS chapter. Okay, now let us quickly revise the accounting cycle. Accounting cycle, can you tell me the accounting cycle first step? Accounting cycle first step, identify the transactions. Identified transactions are recorded in the journal. Recorded transactions are posted into ledger, and ledger accounts are balanced. And after that, we prepare a trial balance. After that, we prepare final accounts. This is our accounting cycle. Now, you people tell me, in this accounting cycle, do you find any name relating to bank reconciliation statement? Sir, no, sir. See, journal. Subsidiary books we understood. Instead of maintaining one journal, we are maintaining various subsidiary books. Ledger, yes, there is a chapter called ledger. Trial balance, there is a chapter called trial balance. And cash book. Cash book is a part of subsidiary book. And accounting for GST. See, accounting for GST concept, what we have learned journal entries only. When we purchase goods or sell goods, at the time of purchase of goods, we pay GST. At the time of sale of goods, we charge GST. When charging GST and payment GST and utilization, setting off of GST, what are the entries we record? That only we have understood in the case of accounting for GST now. And in the chapter of bills of exchange, we understood that it is a special transaction. Bills of exchange is a special transaction, and how it is recorded in the books of accounts. See, bills of exchange is drawn and accepted entry. After drawing it, now we have four options: either we can retain or discount or endorsement or bill sent to bank. Again one more transaction na, record the entry. On the due date it may be honored, record the entry. It may be dishonored, record the entry. It may be retired before due date, record the entry. It may be renewed, record the entry in case of renewals. And the drawee may become insolvent, yes, record the entry for insolvency. And the concept of bills of exchange can be used for accommodation bills also. The mechanism of bills of exchange can be used by some people for to meet their financial needs, temporary financial needs. Again there is a concept bills of exchange, it is discounted amounts. And so these are the further transactions. In the entire chapter of bills of exchange we have seen that transactions, entry, transaction, entry. Now tell me, in this chapter of bank reconciliation statement, what it is? What it is? That is nothing but background. So it is not a part of bookkeeping. We understood bookkeeping, accounting. It is not a part of bookkeeping, or neither a part of bookkeeping nor accounting. Then what it is? What it is? If it is not there in the accounting cycle, why we are learning? Why we are learning? That is nothing but background of BRS. Now we try to understand the real background. So this is just accounting cycle point of view. Now why we need this BRS chapter? Why we need this BRS concept? Look at nowadays every businessman, not only businessman, every individual is dealing with a bank. Every individual and businessman, every person, to put it simple, every person is dealing with the bank. Okay, now how the relationship between businessman or an individual and bank exists. Suppose I am an individual, I have opened an account with the bank. From now there is a relationship between bank and me, its customer, bank's customer. So what are the transactions I will deal with the bank? Regularly I may deposit money or I may withdraw money. So I am using phone pay or google pay, nothing but what I am dealing with bank. The bank balance will be reduced from my bank account at the back end. Hope you are following. Sir, for this and bank reconciliation statement, what is the relationship, sir? Where is the relation, sir? Yes, there is a relation. Look at, see, businessman businessman, let us say Mr. A, regularly deals with bank in the form of what? He will deposit money. He will deposit money and he will withdraw money. He will withdraw money. How he can withdraw money? Either by check, check issuing, or by transferring money in online, RTGS, NEFT, whatever it may be, IMPS, UPI payments. He may do some UPI payments, phone pay, google pay, like that. And how can he deposit money? The money can be he directly deposit money, or our customers may directly deposit money into our bank account. So these are the various transactions between Mr. A and bank. Whenever a transaction is happened, see, we are dealing with the bank now, so we do so many transactions with the bank. Whenever, so only two transactions, deposit, withdraw, but this may be in different ways or different forms. So depositing money and withdrawing money. Okay, tell me, when you deposit money, immediately we record this transaction in our cash book. Which cash book you maintain? Will you maintain simple cash book or two column cash book or three column cash book? So there may be possibility of maintaining two column cash book, two column cash book with the cash and bank column, or we may maintain three column cash book, three column cash book with cash, bank and discount. This is from Mr. A point of view. From Mr. A point of view, Whenever we transact with the bank, he will record either in 2 column cash book or in 3 column cash book, whatever the cash book he maintains. But it should have bank column. It should have bank column. Do remember. At the same time, bank also maintain bank also maintain books of accounts. Yes, when we are maintaining bank account in our books, bank will maintain customer account, Mr. A, customer account in the bank books. So here account number, bank will recognize customers through account number. See, you have opened an account, you will get account number. Suppose there is a person called Mr. A. There are so many people with the name of Mr. A. Surname may be different, but bank will not recognize you by your name. Bank will recognize you only with the account number, customer account number. Hope you are following. Yes, sir. Now look at, we are depositing money in the bank. We are depositing money in the bank. Do remember in the entire chapter of BRS, cash book means 3 column cash book, that too bank column. Do remember in the entire chapter of BRS, cash book means bank column only. Cash book means bank column only. Right? Now, we take one transaction. Cash deposited. Cash deposited in bank. Rupees 1 lakh. Rupees 1 lakh. Now tell me, how do we record this entry in the cash book? Sir, it is recorded in the cash book. Debit side, sir. 1 lakh. What's the entry? Bank account debit to cash account. Because we are depositing cash now. Bank account debit to cash account. 1 lakh, sir. Cash book. Okay. The same entry is recorded by bank. How? See, bank is receiving cash. Yes, sir. So cash account debit to customer account. So in the books of bank, it will record by cash 1 lakh. Observe carefully, when we are debiting bank account, this is bank column. When we are debiting bank account, bank is crediting our account. See, suppose I have sold goods to you. From my point of view, it is what? Sales. From your point of view, it is what? Purchases. And when I am depositing money in the bank, cash is going out from my organization and cash is coming into your bank. So how we record the entry? Bank account debit. Who is the receiver? Bank. Bank account debit to cash account. And what is the entry in the books of bank? Bank is receiving cash. So cash account debit to who is the giver of this cash? Customer. So customer account credit. When we debit bank, bank will credit our account. Bank will credit our account. Hope you are following. Yes, sir. Next. Cash withdrawn from bank. Rupees 50,000. Tell me, for this, what is the entry we record generally in the cash book? Cash is coming into our organization. So cash account debit to bank account. So here we write credit side 50,000 rupees. In the cash book credit side, we write 50,000. And the same entry is recorded by bank also. Yes, sir. How the bank records? Who is the receiver of cash here from bank point of view? Customer. So customer account debit, that means customer account number debit, cash is going out now. So cash account or withdrawal, they may write how much? 50,000. So whenever we are dealing with the bank, bank is recording entries from bank books. In the bank books, we are recording entries in the cash book. Clear? When we debit bank account, bank is crediting our account. When we credit bank account, bank is debiting our account. Now balance bank account once. Cash book credit side 1 lakh, here debit side 50,000. What is the difference? 1 lakh rupee balance. What is it? Sorry, 50,000 is the balance. How much balance? 50,000. 50,000 is the balance. Okay, this is cash book balance. Tell me, bank balance as per cash book. How much? 50,000. Tell me, is it debit balance or credit balance? Debit side more or credit side more? Sir, debit side more, sir. Means debit balance. Means debit balance. Now, in the same manner, balance bank account also. Balance bank account also. Credit side how much? 1 lakh. Debit side how much? 50,000. So, to balance it, what we write? 50,000 rupees. It is to balance carried down. Now, you people tell me from banker point of view, balance as per passbook how much? 50,000, sir. Balance as per passbook how much? 50,000. Tell me, is it showing debit balance or credit balance? From bank point of view, it is showing credit balance, sir. From bank point of view, it is showing credit balance, sir. What is your observation? From our point of view, bank is the receiver. That means bank has to pay 50,000 to us. From bank point of view, bank has to pay 50,000 to its customer. So we treat it as asset. Bank will treat it as liability. Bank will treat it as liability. And you can observe that as per our books, 50,000 rupees balance, as per passbook also 50,000 rupees balance. So balance there is no difference. But look at, from our point of view, 50,000 is debit balance. From our point of view, 50,000 is debit balance. From bank point of view, 50,000 is credit balance. Observe, opposite in nature, opposite balance, but amount is same. Amount is same. Amount is same. Understood? 50,000 rupees amount is same. When it is possible? When it is possible? Only when we record the entry correctly and bank records the entry correctly, then we get at the end ultimately 50,000 rupees balance. From our point of view, it is debit balance. From bank point of view, it is credit balance. Clear? But practically, it will not happen. Practically, it will not happen. There is, you can write this statement. Practically, bank balance as per cash book and passbook is different. Is different. Practically, you can observe. You can observe. If you are a businessman, observe your cash book balance. Cash book balance means bank balance as per cash book, and look at the passbook. When you open an account, bank will issue a small book. Na, it is nothing but passbook. Periodically, bank may send statement also. Okay. Now tell me. Now tell me. The transaction is recorded by us and by the bank. If the transaction is recorded by us in the cash book and by the bank in the passbook correctly, then we should get the same balance na. We should get the same balance na. But the nature of balance may be different. Amount of balance is same na, 50,000, 50,000. But practically what happens? The amount of balance will change. The amount of balance will change. Suppose sometimes here as per cash book the balance is shown 50,000 debit balance, but sometimes in as per passbook same amount may be shown, but it is also maybe debit balance. It is also maybe debit balance. Practically na cash book and passbook, these are Tom and Jerry. Practically cash book and passbook are Tom and Jerry's. Tom and Jerry's. The balance will never be equal. The balance never be equal as per cash book and passbook. In this scenario, what we have to do? What we have to do? Will you ignore this fact? Will you ignore this fact? Don't you want to know that why this difference is? As a businessman, you should know the difference. Why this difference is? When a transaction is happened between me and the bank, I am recording in the cash book and bank also recording in the passbook. Then finally we should get same balance now, same amount of balance now. Then why it is not happening practically? Now here the businessman wants to know the reason. To know that, we prepare a bank reconciliation statement. A bank reconciliation statement. So a bank reconciliation statement is a technique. Bank reconciliation statement is a technique. Preparation of bank reconciliation statement is a technique to know the differences or to know the causes, not differences, to know the causes. Why this difference? What is the reason? What is the cause between the bank balance as per cash book and passbook? So it is simply a technique to know the causes of bank balance as per cash book and passbook difference. This is our background for bank reconciliation statement. So here most of the students are lagging behind understanding the basic background of this chapter. And most of the, see here, only simple thing, a transaction happened between bank and customer, its customer. So it must be recorded in the cash book and passbook. When we record the same on the debit side, but passbook will record opposite now. See, both people will not treat the same as debit. My point of view, purchase account debit. Your point of view, sales account credit. Will you debit purchase and sales in the same manner? No, opposite. When I debit your account, see, from my point of view, you are the receiver. From your point of view, I am the giver. So receiver account is debit, giver account is credit. Will you violate the rules of debit credit? No. In the same manner, here sometimes bank is the receiver. When bank is the receiver, we debit bank account. When bank is the giver, we credit bank account. From bank point of view, customer is giver. When customer is giver, they will credit. When customer is receiver, they will debit. Opposite in nature. So when all transactions are recorded in a proper manner, then ultimately the balance must be equal. If the balance is not equal, then as a businessman, because amount is involved, amount is involved, so we have to see the reasons or causes for the difference. So how to identify the causes, how to identify the causes, and how to present these causes in a statement format. See here, so presentation is nothing but bank balance is this much, and let me check. See, cash book balance is 50,000, whereas passbook balance is 20,000. Let us say cash book balance is 50, whereas passbook balance is 20. So how much is difference here? 30,000 rupees is the difference. Why it is different? Why it is different? Tell me. What are the causes? We present them in a statement format. Means here we reconcile cash book and passbook. Reconcile means comparing. Cash book and passbook is compared. I have recorded the entry, whether bank also recorded the entry, same amount or any different. Bank recorded the entry, whether I recorded the same or not correctly, any mistakes I committed or any mistakes bank committed, we reconcile all these things. Only two things, cash book and passbook. After reconciling, we identify the reasons why the difference is, that we see in the illustration 1, how to reconcile cash book and passbook. Wait for some time. Okay, after that we identify the causes. Now the identified causes, we present them in a neat manner in a statement format, bank reconciliation statement. The difference is 30. For this difference of 30, is the cause is one transaction, because of one transaction this 30,000 rupees difference, or because of multiple transactions this 30,000 is difference, that we see in this chapter. This is the background for bank reconciliation statement. Okay, now look at. So to solve the problems on bank reconciliation statement, you should have solid conceptual base on cash book. Solid conceptual base on cash book. At the time of cash book, I discussed this chapter will help you in solving problems of BRS. Yes. Look at now cash book. Just we quickly revise. All cash transactions we record in the cash book now. So we have different types of cash book. Simple cash book, 2-column cash book, 3-column cash book. But in our BRS chapter now, we consider this 3-column cash book exclusively bank column, not blank, bank column. Forget about remaining columns. Forget about remaining columns. In the entire chapter of BRS, cash book means bank column only. Okay, and we know that bank cash book is a book of primary entry also. Now look at the bank passbook. See, whenever you open an account with the bank, na, bank will give you a small book which can be used for it is nothing but, to put it simple, the passbook is nothing but how the bank is recording the transaction in their books. See, I have deposited 1 lakh rupee in my bank. I have a doubt. I am recording this 1 lakh in the cash book. Whether bank is recording this 1 lakh rupee in the bank books or not, for the evidence of that, they are giving you passbook. So this passbook is nothing but a copy of ledger. See, in our books we are maintaining bank account, na, it is nothing but ledger account. Bank also maintain customer accounts, na, it is also ledger account. So bank is giving a copy of ledger account of you in the books of bank in the form of a small book, that is bank passbook. So it is updated time to time, but nowadays nobody is caring about this passbook. Why? Because everybody is using mobile application or internet banking. So through internet banking or mobile application you can download the bank statement. Bank passbook and bank statement both will serve same purpose. It contains all the transactions with bank. Hope you are following. And periodically bank sends this statement to the customer. Suppose if you have opened an account with the bank, at the first week of every month they will render statement through mail id. Hope you are following. Or you can download from internet banking, no problem, or mobile banking. Hope you are following. Look at bank passbook. A bank passbook is merely a copy of the customer account in the books of a bank. If you are in the home, just go and ask your parents, please show me the bank passbook. Or some of you may have bank account now, so you can check your bank passbook. Bank statement. The bank sends periodical statements of account to its customer. You need, see, for updating the passbook, you have to go physically to the bank, or you have to send this passbook through any other person. But bank statement, bank will send this statement to you to your mail IDs. It contains all deposits. Which information it contains? Deposits, withdrawals made by the customer during the particular period. Suppose from bank has sent 1/1/2025 to 31st 1 2025. For 1 month bank is sending a statement. For this period bank is sending a statement. For every month bank will send a statement. You can check your mail also if you have any bank account in the bank. These days customers can easily access their bank statement online at any time, facilitated by net banking or mobile banking. Updating the passbook. See, to update the passbook you have to approach physically to the bank. You have to carry your passbook and bank will update the same. But nowadays some ATM centers they have kept a machine, printing machine, or bank passbook updating machine. You can put your passbook there and you can update it simply. Okay. Next one, passbook versus bank statement. Both will have same information: account number of the customer, the time period for which the bank statement is rendered, and what are the transactions recorded. Same details contains in the passbook and bank statement. Look at the bank passbook and statement represent a copy of the ledger account of the customer in the books of bank. Whether it is passbook or statement, both are nothing but a copy of the ledger. See, you can observe here, passbook. Okay. Thus, it is the bank's way of keeping the customers informed of the entries made in their accounts. The bank itself sends the statements. See, bank statement is sent by bank, okay, to customers. But if the customer wants to maintain a passbook, then they must send the passbook to the bank periodically so that it is updated by the bank. Observe the format of passbook. Normally, in our cash book, how we maintain account? Bank column T shape. T shape. Debit side we write receipts. Credit side we write payments. Daily this cash book is balanced now, so we write the balances. So we maintain cash book in a T-shaped format, whereas bank will maintain customer account in a statement format. Statement format. Look at the way of maintaining. This is very very important. The way of maintaining customer account. Sir, why bank will maintain customer account like this only? Why don't bank maintain customer account in T-shape format? See, if you observe in T-shape format, if we maintain customer account for every, see, in the bank what happens? Customer will deposit money, his account balance will increase. Customer will withdraw money, his account balance will decrease. Suppose if any amount is withdrawn by customer, first we have to check whether this much of balance we have in the bank or not. Suppose customer has written in the withdrawal slip some 2 lakhs rupees, whereas actually he has only 1 lakh rupee in the bank. Without knowing how much of balance he has in the bank, is it possible to pay 2 lakhs rupee? Not possible. So every time what we have to do, every time he withdraw money, we have to balance the customer account. We have to balance the customer account. And you know how hectic it is to balance the customer account in T-shape or any account in the T-shape format. We have to total debit, total credit. We have to write by balance C by D. Again to balance B by D. We have to write like this. So balancing is different in T-shape format. That's why bank has changed its account format. So they are maintaining like this. How, sir? Look at. So I will give you one transaction. Look at. Suppose 1,125. I have deposited money into bank. Entry from bank point of view. Cash account debit to customer account. So by cash. How much amount he has drawn? Look at. Column names observe. Date, particulars, check number, withdrawals, debit. Withdrawals, debit. Deposits, credit. Now, are we crediting or withdrawing? Crediting, sir. How much? 1 lakh. How much you are crediting? 1 lakh. Now, what is the balance? Immediately in the next column, we write the balance. Suppose on 5/1/2025, I am withdrawing money. What is the entry bank will record? Customer account debit to cash. So, two withdrawals. Two withdrawal. How much amount I am withdrawing? Let us say 50,000. Withdrawals are written in the withdrawal column. Deposits are written in the deposits column. Now tell me what is, see, how to calculate balance is important. What is the previous balance? Sir, previous balance is 1 lakh, sir. Just a minute. What is the previous balance? Tell me. Previous balance is 1 lakh, sir. Previous balance is 1 lakh. Okay, fine. Now how much amount withdrawn? 50,000, sir. How much amount withdrawn? 50,000. Previous balance 1 lakh. Amount withdrawn 50,000. What is the difference now? 50,000, sir. So what is the balance here? 50,000. Hope you are following. Sir, I observed one thing, sir. What is that? Sir, after every transaction, bank is balancing customer accounts, sir. Wow, good observation, my dear students. Sir, after every transaction, bank is balancing customer accounts, sir. But in the T-shape format, generally we balance the account periodically. Cash book daily, remaining accounts monthly once. Like that we balance, na, sir. Sir, but in the passbook, bank is balancing customer account after every transaction. Yes, this is what bank needs. This is what bank needs. Next time when you come to withdraw 1 lakh rupee, immediately bank says, hello mister, you have only 50,000 rupees in your account. Check it in the passbook. Go and write another withdrawal column, withdrawal slip. Okay sir, okay sir. Yes, understood why bank maintains customer account like this. So tell me what is the thumb rule here? Bank maintains customer account not in a T-shape format, in a statement format. Second, bank balances customer account after every transaction. Bank balances customer account after every transaction. Clear? Yes, sir. Next one, cash book versus passbook. Cash book versus passbook. Very, very important concept, students. Wherever we deposit into or withdraw money from bank, already we discussed these points, just you observe. So one is recorded in the bank column of cash book in the customer books, cash account, cash book in the customer books, and a bank statement or passbook in the bank books. Okay, look at cash book. It is who maintain cash book? We, cashier. Businessman will maintain cash book, but cashier will maintain the cash book. Who will maintain passbook? Bank will maintain the passbook. Okay, next, the bank balance is shown in the cash book is known as the cash book balance. but the bank balance shown in the passbook is the passbook balance. Okay, passbook balance. Next, the debit balance in the cash is called favorable. See, cash book, debit balance, debit side is more, debit side means receipts are more, means favorable. If it is credit balance, then unfavorable. See, credit balance means credit side is more, credit side what we write, payments, so automatically unfavorable balance. The same if you observe the passbook. So let us say for time being passbook also T-shape format, debit credit. Debit side what we write, withdrawal. Credit side what we write, receipts, deposits. So if deposits are more, then automatically credit side is more than debit side, then it is favorable balance. So passbook debit balance is, sorry, credit balance is favorable balance. If withdrawals are more means debit side is more, that means withdrawals are more than deposits, then it is debit balance, means unfavorable or overdraft. So try to understand this concept, cash book and passbook. Next, note point, look at, students may note here that the nature of balance is shown by the passbook in the books of the bank and cash book in the books of the customer is quite different. Always it is quite different. See, for example, if Mr. A deposited 1 lakh in his bank account, it will be recorded in the debit side of his cash book, but for the bank it's a receipt, so it will be recorded as a credit entry in the bank statement of the passbook. Next one, obtaining a certificate from the bank, important concept. At the end of the financial year, suppose 1/4/2024 to 31/3/2025, this is one financial year. At the end of the financial year means 31st March 2025, every businessman should get a certificate from the bank how much of balance you have in the bank. Very, very important. So when you approach the bank will give you the certificate from the bank. Okay. Next one, bank reconciliation statement. So first try to understand what is reconciliation. After that we understand bank reconciliation statement. See, whenever there is a difference between two sources, two things, whenever there is a difference between two things, what we do first, we try to compare the two things. This comparison is nothing but reconciling, comparing two things and identifying the difficulties or causes, identifying the differences. To put it simple, differences or causes or reasons, whatever you call, this process is called reconciliation. Observe carefully here, bank reconciliation statement. Here what we are reconciling, cash book and passbook are reconciled. The same reconciliation process can also be done for accounts receivables. Accounts receivables, nothing but debtors. So we reconcile accounts receivables also. At the same time, accounts payables, nothing but trade payables, creditors. The reconciliation is possible not only for bank purpose. The same concept may be applied for accounts receivables and accounts payables also. We cross check the accounts receivables and accounts payables. That you can understand only after entering into the articleship. Okay. Now look at. So what is the meaning of reconciliation? Look at. To reconcile means to identify or discover the differences between two sources, two things, and eliminating that difference. The process of eliminating this difference and bringing the two sources in line with each other is known as reconciliation. Here I shown you. Yes. So here cash book balance and this is passbook balance. And we are trying to eliminate the difference, means 30,000 is the difference and we are presenting why the difference is. Okay, this is reconciliation process. Bank reconciliation process means the reconciliation technique we are applying for checking bank balance as per cash book and passbook. The statement that reconciles the bank balance as per the cash book with the balance as per passbook by showing all the causes of difference is known as the bank reconciliation statement. If the same reconciliation technique is followed for accounts receivable, it is nothing but accounts receivable reconciliation statement or accounts payable reconciliation. Hope you are following. So reconciliation is a technique. It can be applied for anything where two sources or two things are involved. Then we can compare them and we can eliminate the differences also. This is our bank reconciliation statement. So in the next video, we discuss about transactions between the bank and its customer and the remaining steps involved in the bank reconciliation statement preparation. See, solving problems. To solve the problems, this basic understanding is very, very important. It is not possible, it is not that much possible to reconcile between two things. Why? Because if you want to say differences between two things, first of all, you should know about one thing at a time. You should know about cash book and you should know about passbook. How the transactions are recorded in the cash book, how the balance is represented, cash book balance is represented, and how the transactions are recorded in the passbook, and how the passbook balance is represented. All these things you should know first. That's what we are trying to learn in the basic chapter, basic lectures. So some 2 to 3 lectures are on the understanding of these basic things. After fourth or fifth lecture, we start doing our recordings, solving problems. Okay, right, that's it in this video, students. We meet again in the next video. Till then, bye bye everyone. Now in this video, we try to understand the transactions between bank and its customer. See, for the preparation of bank reconciliation statement, first of all, we should understand what are the probable transactions that may happen or that may arise between the bank and its customer. Once you can understand the transaction, and when the transaction, see, we already understood that whenever we deal with the bank, this transaction, whenever we deposit or withdraw money from bank, this is recorded in two places. One is cash book in the books of customer and bank passbook in the books of bank. Customer account in the books of bank. Now we try to understand the transaction when it is recorded in the cash book and when it is recorded in the passbook. If you can understand this now, then preparation of BRS becomes easy for us. Now let us start the transactions between bank and its customer. Already some of these transactions we have discussed in the chapter journal entries, banking transactions. Okay, again we discuss here also. Now look at the first and foremost transaction between the banker and its customer is the relationship exists between bank and its customer with the opening of an account by the customer in the bank. Hope you are following, right? So this is the first and foremost transaction. What is that? See, we open an account with the bank. At the time of opening account with the bank, we have to deposit some money now. Yes. In that case, when the transaction is recorded in the cash book and when the transaction is recorded in the passbook, and this cash book is in the books of customer and passbook is in the books of bank. Do remember. Now tell me, when we deposit money in the bank, immediately what is the entry we record? Bank account to debit, bank account to debit to cash account. This is the entry we record. Means in our books we are debiting bank account. In our books we are debiting bank account. Then what about the entry in the books of bank? Customer, just a minute, cash account to debit, bank receives cash na, so cash account debit to customer account, cash account debit to customer account. In the books of bank, bank is crediting customer. Can you tell me at what time we record the transaction and bank also record the transaction? The moment we hand over cash with the bank, bank immediately record the transaction. Yes sir. And at the time of preparing, at the time of depositing, or at the time of preparing the pay in slip, How can we deposit money with the bank? In the case of subsidiary books, we have discussed na, paying slip, vouchers, all those things. So at the time of filling the paying slip, what we do, we also record the transaction in cash book and the same cash is deposited into bank. Second transaction, cash withdrawn for office use. Cash withdrawn for office use. Then what is the entry we record? Tell me. We record the entry cash account debit, cash account debit to bank account, cash account debit to bank account. What is the entry in the books of bank? Customer account debit, because customer is taking money, na, customer is the receiver. So customer account debit to cash account. Now you people tell me, because of the first transaction, our cash balance increases, na? Sorry, our bank balance increases. Because of first transaction, our bank balance will increase. Because of second transaction, our bank balance gets decreased. Hope you are following. Next one, tell me, checks deposited in the bank. Suppose we received checks from customers, or we received any income through check, and that check we are depositing into bank. Then what is the entry that we record in our cash book? Simply we debit bank account debit. Let us say we received check from a debtor, so debtor account credit. Now tell me, because of this, is our bank balance increase or not? Yes, our bank balance gets increased. Then what is the entry that we record in the bank books? And do remember, today we are depositing check into bank. Bank will record this transaction only after collecting the check. I repeat, today you are depositing check. Very good. And bank takes some time to collect the check amount. After collecting the check amount, bank records the same transaction in the passbook. Till it collects the check, it will not make any record in the passbook. So here there is a time gap between recording check deposit entry in our books and in the bank books. Observe carefully. We record this entry at the time of depositing check into bank. Bank record the same transaction only after collecting the check. Do remember. After collecting the check, bank records the entry cash account debit to customer account. Because bank will collect amount from the person who has given check to us. Yes or no? So bank will receive cash. So forget about this. Look at this. Customer account credit. Customer account is credited by the bank. Hope you are following. Yes. Next one, look at fourth one. Dishonor of deposited check. See, here we have deposited check now. Now the deposited check becomes dishonor. We have already discussed this type of transaction in cash book. If the deposited check becomes dishonor, then what we do? Immediately we record the reversal entry. See, earlier which entry we have recorded? Bank account debit to debtor account. Bank account debit to debtor account. Now this entry becomes reverse. Observe carefully. Now what is the entry we record? Debtor account debit to bank account. Debtor account debit to bank account. Clear? Now tell me, our bank balance, in this case, our bank balance gets decreased. Actually, original balance not decreased. Our on record balance decreased. Earlier at the time of depositing check, we debited bank account. So in our books, bank balance increase. But whereas, if you see the actual amount in the bank, that is different. Always do remember, bank balance as per cash book may not be equal with the bank balance as per passbook. Whatever the balance we have in the bank, that is actual cash at bank. But this is cash book balance. This is just bank balance as per cash book. Do remember. Next one. Here, bank will not record any entry. Why, sir? See, bank records entry for check deposited only after its collection. Only after its collection. Here bank is not collected the amount. Then why bank records the entry? So no entry in the books of bank. Next one, look at checks issued for payment. We have issued checks. What is the entry we record? Let us say we are issuing check to creditor. So creditor account to debit to bank account. Tell me, here our bank balance gets reduced. Do remember? See, as per books, yeah. Uh, Let me give you clarity here. Look at, because of first transaction, passbook also our balance gets increased. Because of second transaction, in the passbook also, as per passbook also our balance gets decreased. Are you able to follow? As per cash book, balance increase decrease, or as per passbook, balance increase decrease. Observe carefully. Because of third transaction, our balance gets decreased. Just a minute. Because of third transaction, our balance gets increased if bank collects the check. If bank collects the check, our balance increases. But here, no difference. No difference, tell me. Yes or no, students? Or if bank earlier not recorded the entry, here as per cash book they reduced the balance, but in the bank it has same balance na. There is no change. Cash book one time increase, cash book one time decrease, effect nullified, but whatever the balance we have in the bank, the same balance now. Yes. Now look at fifth one, checks issued for payment. We record the entry creditor account debit to bank. If okay, now I have given check to you today. Today I have given check to you. What you have to do? You have to visit your bank and deposit the same into your account. Then bank will collect the check. Then it gives your account credit. What my banker will do? My banker will reduce my account balance when your banker presents the check to us. Hope you are following. So I repeat. Today I have given check to you. Okay. When my bank, I am recording the entry in the books of in my books. Because of this my bank balance gets decreased. Because of this my bank balance gets decreased. Whereas whereas actual bank balance when it is reduced, actually when the bank balance gets reduced, this is the question. For that, first I have given check to you now. You deposit into your bank. Once your banker collected the check, automatically your account balance will increase, my account balance gets decreases. Unless you deposit the check into bank, or if your banker fails to collect the amount, how my banker reduces my account? Not possible. So unless you present check into bank, my banker will not reduce the money. This is very important. Now tell me, if it is presented, then what is the entry banker will record? Customer account credit, sorry, debit. Customer account debit to collecting bank credit, to collecting bank credit, because to them they will pay collecting bank. Is it clear? Yes, sir. So our bank balance gets decreased now. Cash book also decreased. When bank pays amount originally, then also it is decreases. Next entry, next transaction. Dishonor of the dishonor of checks issued. Dishonor of checks issued. We have issued checks now. We have issued checks. Now the check becomes dishonor. So simply what we do, we pass the reversal entry, means bank account debit to creditor account. This is the entry we record. Now tell me, because of this our bank balance increase again. Earlier we issued checks, that's why we credited bank account. As per our books, balance reduced. But bank not paid the amount, so that bank balance is more. But now what is happening? The check is dishonored. That's why now we are recording the entry for a dishonor. Again, our bank balance is increasing na, as per our books. In the bank, there is no change. So, bank will not record any entry for this. Why? Because bank records only it pays amount. If it is not paying amount, then there is no entry na. Then there is no entry. Observe carefully. Next one, seventh. Seventh one, collection of bills or checks directly on behalf of the account holder. Sometimes what we do is, sometimes we send bills to the bank for collection. In the bills of exchange chapter we discussed na, we send bills to bank for collection. Now, if the bank collects the check amount, sorry, bills amount or checks, whatever it may be, what happens? Our bank balance gets increased now. In that case, what is the entry bank will record? Our account gets credit. Our account gets credited. So our bank balance will increase. In the bank, our balance increase. Now, after knowing this fact to us, what we do, we record the same transaction in our books. First, who is collecting? Bank is collecting. Who will record the entry? Bank will record the entry. After getting bank statement or after updating our passbook, what we do? We also record the entry now. What is the entry we record? Bank account debit to bill sent for collection. Did you remember this entry now? So our bank balance also increases. Passbook balance also increase. Cash book balance also increase. Try to understand. Next one, direct payment to the third party on behalf of the account holder. Sometimes we give instructions to the bank to pay some amount on behalf of us. Suppose let us say on 1st January every year, I have to pay my insurance premium to the LIC company. Let us say it is 1 lakh rupee per annum. Now what I'll do, I may forget the due date now. If I forget due dates, then my policy may lapse, or my policy may be under grace period, or they may levy some fine or interest charges. To avoid this situation, what I'll do, I will give instruction to my banker, on so and so date pay so and so money to so and so person. Nowadays if you observe in your phone pay or Google Pay or in your mobile banking or internet banking, you may add the biller. Suppose so and so date I have to pay my electricity charges. So I will give instruction to my banker, on so and so on so and so date, you pay my electricity bill. So automatically when the bill generated na, banker will get that amount, and banker will get the notification, and bank will pay on the due date. All these are possible when you give instruction to the bank. At the time of making payments to these billers, bank will not instruct you again, because already you have given instructions to the bank na. Bank again will not ask your permission. Directly bank will pay so and so date, bank will pay amount if you have. Is it clear? In that case, bank debits customer account directly. Debits customer account directly, so that our bank balance gets decreased. Observe. Who is recording this transaction? First, bank is recording. See, we just give instruction. On the date of giving instruction, we won't record any entry. But once the bank pays amount na, then only we record the entry. When after receiving bank statement or after updating the passbook. Hope you are following. Yes, sir. After knowing this fact, what we do, we record the entry na. Entry expense. It is expense for us. So expense account debit to bank account. Any particular expense or anything, whatever it may be, account debit to bank account. Okay, here you have to observe, in this transaction, in each transaction, in our books, bank account is debiting. In the bank books, our account is crediting. Observe carefully. Observe this. When we debit bank account, bank is crediting our account. When we credit bank account, when we credit bank account, oh, just a minute. Bank is debiting our account. In our books, we are crediting bank. In the bank books, bank is debiting our account. We understood already. When one transaction from my point of view, it is purchase. Suppose purchased goods, okay, from so and so person. From my point of view, it is purchase. From your point of view, it is sales. One transaction. I am recording as purchase. You are recording as sales. In my books, your account is credited because you are creditor. In your books, your account is debited because you are my debitor. I am your debtor. Yes or no? In the same manner, in the cash book, in our book, we if we debit bank account, in the bank books, bank credits customer account. Try to understand this logic. This is the base for whole BRS chapter. Students are failing to solve BRS problems or understanding the concept of BRS because of these small things. If you can understand these small things now, BRS is easy. Damn sure you get a minimum 5 to 10 marks. If it is given for 5 marks, full marks you get. If it is given for 10 marks, 10 marks you get. Yes or no? Nowadays there is a scope to get 100 out of 100 marks in accounts. Yes, practical papers nowadays ICAI is giving, if everything is perfect, 100 out of 100 you get. Is it clear? At least 99. Clear. Next one. Now, because of eighth transaction, our bank balance gets decreased now. Our bank balance gets decreases. Next one, ninth transaction. Dishonor of discounted bills. Bills of exchange chapter. Don't forget. When we discount the bill, then we record the entry bank account debit, discount account debit, two bills receivable. If the discounted bill gets dishonored, bank will collect that amount from us. That means directly bank will deduct amount from our account. Directly bank will deduct amount from our account. In this situation, you people tell me who is recording the transaction first? Bank is recording the transaction. So bank will debit our account now. Bank will debit our account. So customer account debit. Bank is debiting our account. Customer account debit. Full amount. 2. Bills purchased and discounted account. Yes or no? This is the entry we record. Forget about other entry. You observe just whether bank is crediting customer account or debiting customer account. Now, because of this, our bank balance gets decrease. Because of this, our bank balance gets decrease. But suppose if you don't know this fact, I repeat, if you don't know this fact, automatically as per your books, bank balance shows more na. As per your books, your bank balance shows more. But actually, if you see the position in the bank, your balance is reduced when? Why? Because bank recorded this entry without giving any notice to you. But practically it will not happen, but they will inform. But we record the entry only after updating the passbook or getting bank statement. After receiving bank statement or passbook, what is the entry we record in our books? Simple. Drawee account debit. Drawee account debit to bank account. Did you remember bills of exchange concept? Yes. After recording this transaction, as per our books also bank balance gets decrease na. As per our books also bank balance gets decrease. Hope you are following. Next, 10th transaction. Bank charges levied by the bank. Bank charges levied by the bank. See, bank is providing so many services to us. Bank is providing so many services to us. Yes, sir. For the services rendered by bank, bank will charge some amount. So in this situation, who will record the transaction first? Bank is charging amount, so bank will record the transaction. Entry, customer account debit. Customer account debit. 2. Bank charges. Bank charges collected. whatever it may be. How bank records, it is up to the bank. But bank is debiting our account na? Yes sir, it is income for bank. Bank charges collected is income for bank. For us it is expense. So because of this our bank balance gets decreased. After updating the passbook or after getting the bank statement, we record this transaction in our cash book now. See, nowadays if any amount is deducted from bank, immediately we are getting a message, at the same time mail notification also, message notification and mail notification. But in the past there is no notifications, only we can record this only after getting the bank statement or this updated passbook. Okay, now, so after getting passbook, what is the entry we record? Bank charges account debit, bank charges account debit to bank account. So after recording this transaction in our books, our balance also gets reduced. Suppose if you didn't write this transaction, then automatically as per your books, bank balance shows less compared to passbook balance. In the passbook it is showing more na? Yes. Next one, interest and dividends collected by the bank. See, sometimes what we'll do, we give standing instruction to the banker. In suppose let me give you one example. I have some shares in the Reliance Industries, some debentures in the Reliance Industries Limited. What happens on so and so date? Reliance Industries Limited will pay interest. I will give clear instructions to my banker. You can collect that interest on behalf of me. Whenever Reliance Industries Limited pays interest, you collect on behalf of me. Or I have some shares in the Reliance Industries Limited. The company will pay dividend on these shares. So I am giving clear instruction to my banker, go and collect. Whenever Reliance Industries Limited pays dividend now, you collect on behalf of me. So bank is following the same. In that case, when the bank collects any amount, immediately bank credits our account now. Immediately bank credits our account. Who is recording this transaction first? Bank. Because of this our bank balance gets increased. After updating the passbook or after getting the bank statement, the same transaction we record in our books. So what is the entry we record? Bank account to debit to interest or dividend account. After recording this transaction, as per our books, balance increases. Till that time, your cash book balance is less compared to passbook balance. Next one, interest debited by the bank. See, here bank charged some amount. These are bank charges for the services rendered. Here interest debited by bank. Suppose if you have any overdraft, then bank charges interest na. So here in this case, bank debit our account, customer account debit to interest account. Interest is income for bank. For us it is expense. Because of this transaction, our bank balance gets decreased na? As per passbook, in the bank books our balance gets decreased. This entry we record only after getting updated passbook or bank statement. What's the entry we record? Interest account to debit, interest account to debit to bank account, or interest on overdraft account debit to bank account. After recording this transaction, our cash book balance gets decreased. Till that time, your cash book balance shows less, your passbook balance shows more amount. Automatically there is a difference now. What is the difference? Sorry, why is the difference? Why is the difference between cash book balance and passbook balance? Because of this interest transaction. Bank recorded the entry, you are not recorded the entry na, so that there is a difference. If both parties records the entry correctly, then there is no difference. If either party not records the entry, then damn sure we get a difference. So these are the various transactions between banker and customer, and because of each transaction, when our cash book balance increase, when our passbook balance increase, all these things try to understand. Is it clear, students? Yes. So we meet again in the next video. Till then, bye bye everyone.